Okay, welcome everyone to the Childcare Tax Readiness webinar, our 2021 edition. Welcome to all of our new members. Welcome to our returning members. Thank you to our friends. Thank you to my team. And thank you all for being here. So happy New Year. Miss Belinda, I see you're in Bear, Delaware. We're neighbors. I'm in Newcastle. It's a small world. So today I do have an agenda prepared for us, and this is a list of what we're going to cover. I'll be doing an introduction. We'll take care of some housekeeping. We will talk about PPP, EIDL, SBA, grants, PUC, and the tax effect that all of these items are going to have or not have on our tax returns. We're going to talk about our entity. Our entity makes a huge difference. We are going to spend a little bit of time talking about the home child cares versus the centers, the different tax considerations, and the tax similarities. They're more in common than you may believe. We would be remiss if we didn't mention the importance of bookkeeping and documentation. And we are going to give you an overview of the tax preparation process and how to work with us. And then if you are feeling overwhelmed and still not ready, we're going to help you get better. And we will have some time available at the end for some questions. Now, before I go to the next slide, can everybody see me and hear me okay? Thank you. That also allowed me to see how long the lag is. It's not that bad today. So, who am I? Someone said this is their first webinar with me. Who am I and why should you listen to me? My name is Shanita Jones. I am a certified public accountant. I have two spoiled rotten children. They are ages 22 and 15. I have a dog named Benji, and I have a grand dog named Nino Brown Jones. Yes, that is his name. I've been married to my best friend for the last 14 years, and we've been on quarantine for about a year now. So hopefully it can stay that way and he don't kill me. So I founded Jones Taxes and Financial Services in 2010. We originally started so that we could help people understand their tax returns, so that we can help ensure they get every deduction and credit that is allowable to them. We did primarily individual tax returns, business tax returns, but we quickly discovered that the tax return is the end of the story. People needed our help earlier during the year. So we began offering accounting, payroll, tax preparation, tax resolution, IRS representation, and other services to help them with what they needed. So I am a certified public accountant. And what this means is that I suffered and survived all 4 parts of the CPA exam. I can represent my clients before the IRS. I have 3 degrees in business. So that means I like to spend a lot of time getting behind the numbers so that we can help people know their numbers so that they can grow their numbers. And today, I'm going to help you get through tax season and keep as many of your coins in your pockets as possible with minimal stress. Okay? Thank you, Ms. Shannon. Someone has their microphone on. If you could please turn it off, I would greatly appreciate it. Thank you. So let me give you my disclaimer. Please note that the opinions expressed in this presentation are solely my own. Nothing you hear or see in this presentation, the recording, or the broadcast should be construed as tax advice specific to your situation. For tax advice specific to your situation, you should contact your tax professional, or you can hire us and we'll be your tax professionals. At no time will we ever offer legal advice or legal services. For legal advice, we strongly suggest you contact an attorney at law licensed to practice law in your state. And I like to add a note onto that. You also want to find an attorney that is familiar with childcare. So did we all get that? Any questions with that slide? Okay. So, housekeeping. The best way to reach us is going to be on email. Moderators, if you see whose mic it is, could you please turn it off for us? Thank you. The best way to contact us is through email and not social media. It's tax season, so that means we're going to get really busy and we will not be on social media in the inboxes as often. Number 2, all sensitive information. Now, this is tax returns, social security numbers, passwords. All of these sensitive items should be transmitted through our secure portals and systems. They should never be sent via email, and I don't check text messages. Our text messages do not get images, so please, and you don't want to do this anyway, but please do not email me, text message me or email me. So security cards, voided check images, none of that. Our administrative team will delete it and respond to you and ask you to send it in a secure manner. This is all designed to protect you. So, the next thing that we want everybody to be mindful of, okay, I don't think it's you, Shannon, because, no, I don't think it's you. The next thing we like everyone to be mindful of is that we are only able to give specific tax or accounting advice to engage clients. Everyone's situation is different, so you want to make sure that the information you are following and the instructions relate to you. To go, and I use the analogy of going to the dentist. If you go to the dentist and you have a tooth infection and you don't take that whole prescription because you start to feel better and you just put it to the back of the medicine cabinet, and then your cousin, your sister, brother, mother has the same problem and you share that medicine with them, it could kill them. Something called mismedication interaction. My best friend's mother died from that. Rest her soul. It could make you sick, and it could kill your business if you are taking advice or tax prescriptions that were prescribed to someone else. So I want everybody to be mindful of that. And then the last thing we want to make sure you understand is we will not begin any tax or accounting work until we have everything we need. This helps us to operate efficiently and accurately. If we begin and we discover additional information is needed, we will request it. And a few people asked this morning about the time frame. Once we have everything we need, you will get a notification. We will let you know that we're good to go. And then it'll take, depending on how busy we are, 3 to 5 business days. So for the person that cannot hear, we are recording. So, and we're also broadcasting live on Facebook. So you can go visit Facebook. If you go to the Facebook group, you can probably see and hear there if you're unable to hear here. So our fail-safe worked this year. So now let's talk about entity and why entity makes a difference. So I like to start out, and I want to ask anybody that can show me, if you can drop a link in a box, give me a federal tax form for LLC tax return, and I will cash app you $500 right now. Go ahead, take a minute if you need to, hit Google up, and I want you to send me the link to a federal LLC tax return and include your Cash App handle, and I'm going to send you $500. Whether it's one person, 5 people, 10 people, it could be everybody on here. I send you $500 if you can show me a federal LLC tax return. And the reason why I'm able to make such a strong claim that could cost me lots of money is because it does not exist. So part of our mission is to help educate, equip, and empower the business owners and other taxpayers we work with to understand their financial situation. And the reason why I challenge you to send me a federal LLC tax return is because it does not exist. You are right, Ms. Latanya. LLC is a state entity. It is disregarded at the federal level. So if you are an LLC and you are a one member, one owner, you by default will be taxed as a sole proprietorship. And if you are an LLC and you have more than one member, you by default are going to be taxed as a partnership. I want to pause right there on the partnerships. We ask for your EIN letter when we do your return because we want to make sure we're filing the right return for you. Every year, at least once a month, someone asks us to do a tax return for them and they ask us to do the wrong form. So in an overabundance of caution and us doing our due diligence, we require this information to make sure you aren't paying for something that you don't need. So, S corporation. We get a lot of questions about S corporation. An S corporation can have one member, and S corporation can have up to 99 members. There are some other specifics about who can be an S corp and who cannot. That's beyond the scope of this webinar. But in an S corp or partnership, your business is going to file a separate return. Generally speaking, S corps and corporations do not pay income taxes. Instead, those are pass-through entities. That means the business files a return, and then you get what I call a receipt from that return. That receipt from that return shows what your profit from that business is, or your loss. And that receipt, the technical name for that receipt, is called a K1. And it's K like key, the number 1. That's what you will get. An S corporation is a tax designation. You have to already have an LLC, a partnership, or a C corporation before you can become taxed as an S corporation. So you do not become an S corporation because you woke up this day and you decided, I'm an S corp. There is a form to be filled out, and the IRS will send you approval or rejection as to whether or not you are an S corporation. Furthermore, just because you owe money in taxes does not mean you should be an S corporation. That is something that before that decision is made, a consultation should happen, some research should happen, and an educated thought should be discussed. And also with that S corporation, you don't want to become an S corporation 1 year for the here and now. You want to think about your whole tax situation. Okay, so the C corporation. The C corporation can have unlimited members. The C corporation is a legal person. It does pay tax. Whereas on the other hand, the S corporation or the partnership do not. So if you are an individual taxpayer and you are partner or in a multi-member LLC with another person, you guys are going to need to file that business tax return first, get your K1 receipt, and that's going to be filed along with your 1040 personal return. You cannot, so we're not going to hear any more of this discussion where people say, I did my personal return, I'm going to do my business later, right? If you're a sole proprietorship, who's a sole proprietorship? The people that maybe you don't have an LLC. Maybe you're a DBA that's doing business as. Maybe you are just doing business under your own name. You are a sole proprietorship. Your business return is going to be filed with your personal return. And that is going to happen on a form Schedule C. The same thing is if you own real estate, that is going to go on a Schedule E. And if you have that K1 receipt from your partnership or your S corporation, that is also going to go on your 1040 form. If you're a nonprofit, nonprofits, there's 3 forms that a nonprofit may file depending on what their status is, what their revenues are. But if you're a nonprofit, you should be on payroll because you would be an employee of your nonprofit. We don't take draws out of nonprofits or corporations. They don't exist. Corporations can have dividends. So the nonprofit person is the only type of person that would be able to file their personal before their business or their business before their personal, because a nonprofit is an organization and is not technically a business, even though it has some business activities. Am I losing y'all? Are we still here? So I'm going to do my first polling question. Make sure I ain't put y'all to sleep yet. How is my talking speed? Am I talking too fast? Am I talking just right? Or can I speed up a bit? Y'all be careful with telling me to speed up a bit. Okay. Somebody then gave me the green light to talk faster. What have you done? Okay. Miss Belinda says slower. So, okay. And I don't know why just too slow didn't come up as an option. I don't know. This is what happens when y'all let me control tech. As a reminder, we are streaming live on Facebook, and this is being recorded. And God willing, I will remember to save the recording this time. Okay. So back to my slide. They want to wait for a second. Next up, y'all ready to talk about homes versus centers? Homes versus centers. Now, for homes, your most important thing that you need to know, because we always talking about knowing our numbers, you need to know your time-space ratio. Your time-space ratio is so important because it determines how much of the home expenses you get to deduct. So this is why if you have a home-based center or if you have a home administrative office, this is why we will ask you, what is the total, what are your operating hours? What is the total square footage of your home? What is the total square footage of the childcare space? And what is the total square footage of any space used exclusively for childcare? And the reason we ask you this is because we're looking for your utilities. We want the gas bill, the electric bill, the water bill, the cable bill, the internet bill, the home security bill. All of these things, these expenses are ordinary and necessary for you to operate your business. Now, ordinary and necessary is the terminology the IRS uses to determine what is a business expense and what is allowed to be deducted. So in the centers, the same thing. In the centers, you're going to be able to deduct all utility costs, all rent costs, all repair costs. So in a home, you're going to get a portion of that. And that's based on that time-space ratio. So that's why in the home centers, if you're doing your own accounting, we do not support this. We do not do accounting in the system. But for home centers, for home childcares rather, I really like Childcare. Now, if you are a home provider and you are one of the 24-hour shops and you had 30, 40 kids buzzing, you need something more robust. You need something more robust to that. So we use actual accounting software, and you can still take your payments through whatever you want to take your payments through. So let's talk about 1099, cash, and credit cards. So if you are getting paid from state donors or state funders or subsidies or vouchers or purchase of care or NCI or CAPS program or CCIS, you can tell I'm all over the country with the different subsidies. If I missed your state, charge it to my heart and not my mind. Charge it to my mind and not my heart. If you are receiving subsidies from these places, you are going to get a 1099. And yes, this includes the food program. That 1099, we need that to file your tax return. We need the 1099K, like key, if you are using a credit card processor. The IRS has an entire audit technique guide that they use to audit childcare centers. So guess what, ladies and gents? The IRS knows about copays. The IRS knows about late fees. The IRS knows about private pays. Miss Francesca cannot hear me. Is there anyone else that cannot hear me? Well, either you guys aren't commenting because you cannot hear me, or you are not commenting because there's a delay. I hope it's the latter. So if you are receiving cash payments and you do not give your accountant or tax person these cash payments and you get audited, it is on you. When you sign that tax return, it is on you. So yes, we do an overabundance of asking people for this information. It's not that we don't believe you. It's just that we want to do our due diligence, because we know when the people come, the people are coming for you and not us. And we don't want our people to have any problems. So now, payroll. Whether you are in a home child care or a center child care and you have people working for you, there should be some form of payroll. Now, when we go to do your taxes, we need the W-3s, which is a summary of all of your W-2s. We also need your 1096, which is a summary of all your 1099s. And we need your state unemployment returns, because a lot of people forget that they pay unemployment tax. So when you don't have accounting done or bookkeeping done throughout the year, these are the things that we find people most commonly miss. So we want to try to help you keep more of your coins in your pocket today and remind you, this is why we're asking for these things. It's not because we find it so fascinating. It's because we don't want you to miss out on this money or pay any more in tax than you owe. So I'm going to pause and talk about this payroll. We get a lot of questions about independent contractors. If you control your person and they have to work when you want them to work, where you want them to work, they're using your supplies, they have to do what you say, they are probably not an independent contractor. Notice I said probably. And if you want to get to the bottom of it, the IRS has a 5-test rule that you can run your situation through to make that determination. And that's the deal with the independent contractors. If you paid anybody more than $600 this year and they are not on payroll and they are not a S corporation or a C corporation, you need to be giving them a 1099. So a lot of people with the Cash App and the Venmo and the Zelle, and you're just paying. My favorite is I pay for coverage. I pay the opener. If you get audited and you pay these people and you did not 1099 them, you are going to be penalized, and you could possibly be held responsible for the taxes they should have paid and the taxes that you should have paid. It's not too late. You have about 8 days to get out there and get the W-9. So the W-9 is where you collect their name and their social and all that information so that the actual 1099 can be done. And yes, our firm does offer a 1099 service if people need it. Miss Tracy, yes, the long guy. Anybody that you paid $600 or more, if they don't have a corporation of S or C, you need to 1099 them. And by the way, we had another victim that was stolen from Cash App. Their money was stolen from Cash App. Cash App is not for business. It is not a good business practice. It's in their policies, but we shouldn't be using Cash App. Excuse me. Repairs and improvement percentages. So in a home, a lot of ladies and gentlemen will say, we built an addition onto our house and it cost us $30,000. I need to deduct that. Well, ma'am, sir, you can deduct it, but if you added it, if you own your building or you own your house and you added an addition and you paid a significant amount of money, that addition actually gets added to the value of your house, and you are going to get depreciation. And that goes back to our time-space ratio situation that I was mentioning to you. Our time-space ratio, I want to see you say, is going to determine the portion of depreciation you will get for those repairs and improvements. Excuse me. If you're in a center and you do repairs, what's a repair? What's the difference between a repair or an improvement? A repair, something's broken, we had to fix it. An improvement, it makes our asset that we own, our building, it makes it good for a longer period of time, or it makes it better overall. And those things we can't deduct on the spot. They have to be deducted over a period of time. A building used for business is 39 years. So that means if you pay $39,000 for this improvement, you're going to get to write off $1,000 per year. That's my favorite example because it's whole numbers. Do we have any questions about homes, centers, and the things that we can deduct? And while I see you, ladies and gents, typing your questions, another thing I like to add is if you have a home office that you really work in, and that's home head base, and that is where you do most of your work for the company, and you go to work, it is possible, if you have an accountable plan in place, that you may be able to deduct commuting. Otherwise, if we get up and go to work in the morning, we cannot deduct it. I cannot deduct money to leave my house and go to my office because the government doesn't give us any benefit for just going to work. There is not a cap, Latanya, for repairs in a home or roof replacement. It's not a cap. It's just a matter of how much can be written off at a time. So when you go to talk about these improvements, the improvements are, let's say you start your house in year 1. You start using your house for business in year 1. That 39 years start ticking. So if you put a new roof on no, we're not giving out the PowerPoint, but we will give out the recording. So if you put a roof on your house, that roof is going to be good as long as the depreciation is still sustainable. And then if you have a center, can we deduct home office? Yes. So if you have a home office, you may get a percentage. But remember, your home office is going to have to be used exclusively for being a home office. So if the Mr. Revenue Officer showed up and he came into your home office and he finds a bunk bed set, I had a client that this actually happened to them, and they find a bunk bed set and they find the kids' play area or something like that, they could potentially disallow it because the office space has to be used exclusively for business. And no, it doesn't. Well, actually, Ms. Beatrice, that's a good question. Does it matter what type of entity your business is? Yes. How it is treated or handled, that will matter what type of entity your business is. So if you are a C corporation, you don't have a home office deduction. Maybe there's an accountable plan in place whereby the C corporation reimburses you, the employee. Because if you're a C corporation or a nonprofit, you would have to be an employee to be in compliance. If you were an S corporation, which is a member owner, then likewise, there would need to be some sort of accountable plan in place justifying it. And you would never be reimbursed 100%. You would just be reimbursed based on a percentage that is allocable to the business percentage. I hope that made sense. Did that make sense to y'all? Okay. So we're going to talk about another topic, record keeping. So when you show up and you want to have your taxes done, let's talk about the sole proprietors first, because they actually seem to have a tougher time than the corporations. And I understand why. So for the sole proprietors, and everybody, this applies to everybody, but I'm going to go a little bit deeper for the sole proprietors. If you are a business owner and you leave and you're under the sound of my voice, whether today or on a replay, you need to have record keeping in place. You need to have a profit and loss statement of some sort for your business that's going to show your money coming in and it's going to show your money going out. And that report, and it's also good to have a balance sheet because, as y'all know, with all these grants and loans and situations that's going on, they've been asking for all of these statements. So you're going to want to have that profit and loss from business because we need that for the tax return. So as a sole proprietor, you are going to have your business stuff on the same return as your personal stuff. You are just going to have a Schedule C profit or loss from business form, and that's what makes your return a business return. So we can't do the business return if we don't have the business information. Now, you can be a sole proprietor and have 17 locations in your center. You could be a sole proprietor and you can be in a home. So size, dollar amount doesn't matter. I'm not suggesting that anyone be anything in particular. I'm just explaining what you can be and what you can do. So we need that. So when we collect all of your personal information about the babies and the spouses and the addresses and W-2s and 1099s, we also need that business activity so that we can do your business tax return. When you're using accounting software, bank reconciliation should be performed up through the end of the year. Now, for my Quickbooks users, I love Quickbooks most of the time. For my Quickbooks users, a bank reconciliation is not going into that banking screen, hitting add, match. There is actually a module in there for reconciliations. You want to make sure it's reconciled. Making sure your books are reconciled proves that everything that happened in your bank account is in your books. And then if there's something that happened that wasn't in your bank account, it needs to get into your books. And you'll be knowing this because you will be looking over that profit and loss statement every single month. But if it's not reconciled, it's not right. And it is for this reason we chase people down for loan statements. We look for W-3s to make sure it matches the number on your profit and loss statement, because we want to make sure you get everything you entitled to. Most of the things that people do not give us, or most of the delays in tax return processing, is honestly and truly because someone is cheating themselves by not having some form of documentation. No loan statement, no interest expense. No credit card statement, no credit card expenses. Now, we're not required to examine all of your receipts, but we do ask that you break out all renovations and purchases for any item that you made over $2,500. So if you went and bought arts and crafts projects all year long and that added up to $7,000, that is not what I'm talking about. I'm talking about if you went and got furniture. I'm talking about if you went and bought electronics and you did it at the same time on the same day. And this applies to items that have a useful life of more than a year. So when we ask for this breakdown, we're talking about things that would last for more than a 1 year period. And the reason why we have to break this out is because the IRS requires that we depreciate these items. Next up, if you don't have accounting software, we have something for you. We will send you an invitation to complete a form. Now, it is not all inclusive, but it will give you a good start at jogging your memory. It couldn't be all inclusive because we don't know what's in your books because you don't have any. But as you read the questions and fill in the blanks, you'll begin to see what's missing. And then you may even have questions. If you have questions, please email them. Or if Miss Christine or Miss Jacqueline or Karan answers the phone, please be as detailed as possible in your message so that when we call you back, we can get you an exact answer, or they may have the answer for you on the phone. So it's tax season, so we will be at our normal 1 to 2 day response time for phone calls. But a lot of the phone calls where people are waiting on answers, a lot of it honestly could be taken care of by my awesome rockstar team. If your expenses are not total, so some people come with their income and expenses. They have tons of receipts and transactions, but it's not all tallied up. If it's not all tallied up, we can do it for you, but there's an additional charge for that. So if you need bookkeeping or accounting, we do offer those services, but we do give you general categories of how you should calculate your items. If you made estimated tax payments in 2020, please also, when you upload in all of your stuff, please also upload that IRS printout so that you can receive credit on your tax return. The reason why on our questionnaire, we ask, how much did you pay? Did you pay to the IRS? Did you pay to the state? What state? What amount? Is because penalties are calculated based on dates. So based on a date that you, based on a date, and I see that question, I have something for you. Just not sure how to give it to you. So based on the date that you made the payment, that's going to be a factor as to how much penalties, if any, you have to pay. So where are my co-minglers? I have one special lady on the phone. She made me smile. And she said it's not a commingle. She said it's not a comminglement. It's an entanglement. And we know entanglement was one of the jokes of 2020. If you commingle your business and your personal funds, you should check all your bank and all your credit card accounts, because you probably have some deductible expenses that are not being counted. If I'm doing your books and you got this bank account that this is January, and you opened this secret bank account up in May, and I don't know about this bank account will not be reflected in your books. That means the money that came in, the money that went out. And that's why our new system, when we send financial statements, we are now asking people to approve it. So during 2020, we understood COVID crazy, all heck was breaking loose, and we laxed our policy about charging people for turning things in late, not giving us complete information, and having us do additional work. Well, 2021 is here. We have a new system to help remind you and everything. So we know everyone's going to get all their stuff turned in on time. And honestly, it's really designed to help you so that you aren't missing anything. I did see the question someone asked about paying themselves, and we did a presentation a while back on that. So you are welcome to check that out. I put the link in the box for anybody else that is confused as to how you should pay yourself based on your business. So I've been just neglecting Facebook in the Facebook comments. My apologies. So is everybody okay with record keeping? Do you understand what record keeping means? Andy, I see your question about PPP and EIDL. It's coming up, sir. It's coming up. So I don't even see the stream. I think it's still streaming. We'll find out. Does anyone have any questions about record keeping? Thank you. I'm glad you guys understand. So don't forget, some of us, our spouses, will go do things for the business. They'll see something and they'll say, oh, my wife or my husband would love that for the company. Let me buy that. I don't have the business card on me. I'm just going to buy it and get my money back. Make sure you remember to include those expenses. Make sure you give it to your accountant. Do it timely. Don't wait for months, because when you get those statements And if you are on a plan where your tax liability are accountant level and higher, where we're calculating tax liability, and you have expenses that you don't tell us about, we're going to calculate and tell you to pay more tax than you owe. So you are only hurting yourself. We don't want you to hurt yourself. We want you to know your numbers so you can grow your numbers. But you can't know your numbers if you hide them from yourself. We see so many people that miss out on expenses, and we say, you know what? We know there's one person, no rent expense for the entire year. But we know they pay rent because they cry about how much the rent is. Where's the rent money? So what do? We put you on extension until you give us the rent payments. Why? Because we want to file an accurate return and give you the best outcome possible. When I talk about commingling, what I mean by commingling is I'm doing stuff in my business return, in my business bank account, that's personal. So I went and got my hair done. I went and got my nails done. I bought the kids some stuff. I took my girlfriend out to dinner. I did all of these things that were not business, but I used my business account. But commingling works two ways, because there are also people that are doing business things in their personal account. So it's not making it to the books and it's not making it to the tax return. So what I suggest people do is get a Sharpie. And I know y'all got Sharpies because I know they sell them at Amazon with all them Amazon orders. So what I suggest you do is you get a Sharpie. And if you got a business card, well, I know we all have business cards because we're business owners and we have business bank accounts. But you write, if the name of your building is Shanita's Daycare, you write a big S on your business card. So you know that that's Shanita's Daycare. If you got a food program card, a food program account, write a big F on the card so that you know this is my food card. It sounds slow. I promise you I do it too. Which business is which? And the reason why I'm doing that is because I don't want to be like Kevin Hart if the IRS audit me and try to explain to y'all that the way my bank account is set up, I got transferred from the checking to the savings to the checking. The IRS is not trying to hear all that. So commingling is not your friend. What can I do? I'm a sole proprietor. I'm not on payroll. Transfer that money to your personal account. Use Zelle to transfer it to your personal account. Stay away from Cash App because Cash App is of the devil for business owners. Okay, record keeping. I get so passionate about this. Like I said, the other thing, if you signed up for that EIDL grant, if the government, if the SBA gave you EIDL funds, part of what you signed said, I agree to let the IRS come in, the government, SBA, come in if and when they want, whenever they want, and audit my books. And I have to pay for it. Now, your friendly favorite CPA cannot audit your books if I did your books, and we don't do audits. You will have to pay a third party, most likely somebody that doesn't know you, because they have to be objective. So if the government comes in and they having an audit done on your books and your stuff is not right, they could call that loan in instantly. Not good. If you are going for some of these pre-K programs and Head Start programs, instantly could be a problem. If you are a nonprofit, this is not even a conversation that we really should be having because we shouldn't have any personal expenses in a nonprofit. So I don't mean to be a Debbie Downer or a killjoy, but it's important. And I just want to overemphasize the importance of record keeping and not commingling. And 90% of our comminglers are cheating themselves. That's the sad part. Okay. Now, I want to talk about some common mistakes and misconceptions that we have. Numero uno. Number one, mortgage payments are not deductible. If you own your building, if you own your home, and you are paying mortgage because you run your business out of that building, that mortgage payment is not a deduction any day. Now, what you can get is you can get a deduction for the interest. You can get a deduction for the depreciation. What's depreciation? It's the normal wear and tear of that building. And as previously mentioned, for a building, it's 39 years for a building used for business. You cannot deduct that mortgage payment. So if your mortgage payment is $1,000, then part of that's going to be the principal, part of it's going to be the interest. The interest we deduct, the principal we cannot deduct. Credit card payments. You know how we got them Amazon cards and them Staples cards and those Home Depot cards and what else do we like? Oh, we love Capital One Saver and we love Capital One Spark. You know, our credit cards. Credit card payments are not deductible. The expenses that you swipe are deductible. The interest that you pay on that credit card bill and the late fees, they are deductible, but the actual payment is not. If you are deducting that expense when you swipe that card, and then you're deducting it again when you pay that credit card bill, you are double dipping, and you could find yourself in a world of trouble in an IRS audit. Another favorite common misconception from this year, someone is running around TikTok, Clubhouse, Insta, Snapchat, Gram, and telling y'all that you can deduct the expenses you use as a parent if you're homeschooling and you're just home with your child. This won't apply to most of us on this call because most of you on this call are actually childcare providers, and your child might be going into the center. I'm not talking about y'all. I am talking about the folks that were misled and told that because you are homeschooling, you are now an educator and you get that $250, which is way too low, above the line deduction. But the original misconception is tuition for your own school-age children is not deductible. It's never been. It never will be. I don't think so. Professional hairstyles and clothing. Now, y'all be killing it when y'all go do the nice little photo shoots with the t-shirts and even go to the nice places to do them. And you get dressed up every day because you're the director and you have to look nice for work and you want everybody to see how nice you look. Those are not deductible. No wonder why we didn't get the Facebook live stream because I never clicked go live. Thank God for grace because I am recording. I just clicked it. So I told you I would do something. So we never get to deduct the professional hairstyles and clothing, even if it's just for professional appearance. If I'm supposed to look a certain way because I'm talking to my families, or I'm supposed to look a certain way because I'm doing an advertisement for my center. You can deduct the photographer fees, but you can't deduct that nice new outfit. Oh, I see y'all pledging that y'all not going to commingle. Yay. Yay. That's good stuff right there. Another thing, we talked about this a little bit. Commuting to and from work is not deductible. There have been a lot of people when COVID was going on, it's still going on, but when it was really bad, they were paying for their staff to get to and from work. I haven't seen anything in the pubs to allow that yet, but the IRS is changing stuff daily. So who knows? Maybe that's in the code. We can find a way to get that in there. But as of right now, the same rules apply. Unpaid tuition. If someone never paid your tuition and they left your center, like some of these people tend to do, that is not a deduction. We do not get to deduct unpaid fees. You know why? It doesn't matter if we call it scholarships. We can call it a bird, we can call it a water bird, but if it walk and talk like a duck, the IRS gonna get us. And the reason why we can't deduct it is because most of us are cash basis taxpayers. If you are an accrual basis taxpayer, then you may get to deduct it. But the reason why we can't deduct that tuition is because it was never counted in income. So I could see if I counted that I'm going to get $2,000 from this family and they don't pay me, and I counted it and I put it in my numbers, and then they leave and they don't give me my money. If I never counted it, I can't deduct it. But if you think about it more broadly, you can deduct the expenses. You pay staff to take care of that family. You bought supplies. You paid for materials. You did spend money and you didn't bring any in. So you still have a loss, if you will, on the care of that child, but we cannot deduct tuition that we didn't pay. Same thing for staff. If you are allowing your staff members to have their children come to the center for free or for a reduced cost, we don't get to deduct that. I'm sorry. That's just what the rules say. And I have defended people in audits with the IRS, and a lot of these common mistakes and misconceptions are things people got tripped up on. You can't prove negative evidence, Miss Teresa. So if you want, you can prove that they didn't pay you, but because you never counted that as your income, you don't get to deduct it. So proving that they never paid you doesn't help you. Unless the IRS is saying that you got money that you didn't receive, but that's not usually the way it works. Usually somebody says, oh, I made $100,000 this year, but I should have made 105 because they left and didn't pay me my money. So I'm going to deduct that 5 and say I only made 95. That's what we can't do. So personal expenses are never deductible. They don't belong on your profit and loss statement. They don't belong in your books. If you have a nonprofit, they especially don't belong there. If you have a C corporation, those personal expenses are going to cause you to face double taxation. That's taxes times 2. Because C corporations don't have a personal draw or a personal expense. So when you take that money out of a C corp, that's going to be a dividend, not deductible. And then you're going to get a 1099 dividend at the end of the year, and you're going to pay tax on that. So the corporation going to pay tax, and then the person that owns the corporation is going to pay tax. So we really want to get our life together because we don't want to pay tax twice. And this is why it's so important to pay for consultations and choose the appropriate tax structure for your business. Your girlfriend loves you. She's telling you what she knows to the best of her ability. But we don't always see the full picture. So entity, when I started with entity makes a difference, that's why. Because it's oh so important. No business. Now, someone said that their son goes to their mother for homeschooling. You can give your mom, you can get your mom's social, or if she has an EIN, and you can deduct that if you qualify for education credit. I'm sorry, not education credit, child and dependent care credit. You can get the credit for that, and your mom can pay the tax on the income she gets. Because in order to collect the credit, you have to provide the person that you're paying's information. So if it's set up like that, whether your child goes to a center, a relative, a neighbor, whatever, you can deduct it, but you need that tax ID number. Failing to maintain an accounting system. That's another common mistake or misconception. This hurts people because they miss thousands of dollars in deductions. They pay too much in tax. And it also makes it virtually impossible to do any sort of tax planning. So we did an initiative several months ago. We were doing tax planning for people. You know how many people paid us and we had to give them their money back because we couldn't help them? You can't get a tax plan if you don't have books. And if someone is doing a tax plan for you and you don't have books, you may really want to think about what is that information being based on? Because you need to see, okay, what happened last year? What happened so far this year? And what do you think is going to happen next year? You can't do that if I say, how much money did you make? And you say, I don't know. I get this much from food program, and I get this much from CAPS, and I get this much from my private pay. No, you need an accurate accounting system. Just like with the payroll situation. If you are just saying how much you paid your W-2, what about your workers' comp? What about your unemployment? What about any disability, life insurance, or other benefits the company may be paying? It won't be included because you have no books. Mileage. If you driving the children around, maybe you going to this center, especially that milk shortage that happened this year. If you are driving, using your car for business, then you need to be calculating the mileage so you can get your 58 cents a mile. Or maybe the car is in the company's name, and we're not going to get into all of that here because that gets really out of control. But that's a question. That's something that we go through when we're doing a tax return. Stacy says, what about paying more medical insurance or life insurance for an employee? I've been paying it directly. Stacy, that's a whole nother situation. I'm not going to, we'll talk offline. If you're a sole proprietor or a Schedule C person, your business and personal return must be filed together. If you have a business, or maybe you don't see it as a business, maybe you're just keeping your grandkids and all of the families get subsidy and they get that 1099 at the end of the year, you cannot put that aside and file it later. You cannot say, I'm not going to include it this year. I'm going to do it with my next year taxes. It has to be done together because by default, you are a sole proprietor. If I go out tomorrow and I decide I'm going to sell R&B singles because I love to sing, but I can't, and I don't know how profitable that business would be. But if I decided to just open up shop and Shanita Jones went on the air tomorrow, I'm by default a sole proprietor, a Schedule C, unless I do something to make it otherwise. And then the other thing, and I got a typo there. I'm sure y'all educators saw that. I count, I don't spell. If you are a partnership, S corporation, you need to file your business return before you file your personal return. And even those C Corps, if you're a commingler, because you should have a 1099 dividend that gets filed with your personal. I know I said a lot on that slide. So you definitely can have one CPA do the business return, and you can have another CPA do your personal return if that's what you want to do. It's completely up to you. I would just make sure that you give the second person everything that they need in case there's anything that you can deduct on the personal return. You just want to make sure they have all the information. I know that was a lot. That's why I got a replay. And that's why I'm giving it to y'all, because I can't talk, because a lot of the questions that come up, I'm trying to make sure we cover them all, because it can be a lot and it can be busy. And this is information that we all need anyway. So moving right along. Required documentation. And where's my PPP slide? Required documentation. If I don't have a PPP slide, I'm going to make one up for you real quick. You won't see it, but trust me, it's there. What do we need from everybody to do your tax return? We need unexpired identification. I know who you are. I know you're the same person you were last year. But the Patriot Act and the U.S. government, they require that we have this information. So as part of us making sure we doing all the due diligence that we have to do, we have to ask for this information. Okay? So someone asked if they should open up a tax account. It all depends. I would say you should talk to your accountant, because the amount of bank accounts that some of us have is extraordinary and unnecessary. We got 99 bank accounts and we barely have $99 because the bank is charging us $9,900 in overdraft fees. I'm just saying. There are some reasons and some people why it makes sense, but usually it's just costing us money. And it's costing you more money in accounting fees if you go create all these accounts. So we're going to need unexpired identification. We have to have ID for your dependents and proof of residency. So if you have a daughter, a granddaughter, a nephew, we need to have something with their name and your address because that'll prove the residency. It'll prove that they lived with you. So school records, shot records, something from the health company. We have to have that for all dependents under 17 because those are the dependents that get us child tax credit, earned income credit, and those are the dependents that get us audited if we don't follow the rules. If you are married and filing separately, we still have to include your spouse's information. Your husband or your wife is not going to be entitled to your refund. They are not going to be able to get information about your tax return without your permission. They are not going to be responsible for paying your tax debt if you marry filing separately. But the government, if Shanita's filing separately, they want to make sure that Karan is filing separately too. So that's why on that tax return, when you say married filing separately, they still want to see your spouse's name, his or her social security number, and their date of birth. And that's the way for the government to cross their T's and dot their I's to make sure. I'm going to tell y'all why it started. They do that to make sure there are not two people that's married. They got 5 or 6 kids. They split the kids up and they file in inappropriate manners to get as much refund as they can. The government found a way to crack down on that. I'm just the messenger that doesn't play with the IRS. Your IRS EIN letter. We ask for your IRS EIN letter, again, because we want to make sure you are filing the right return. We love you, we respect you, we trust you, but sometimes former accountants don't always clearly explain to the business owner what they did or what's been done. And we have people all the time that say, I'm an S Corp, I'm this, I'm a that. We filed a return, and then they get a notification from the IRS that they got thousands of dollars of penalties because they didn't file the appropriate return. We don't want to see that happen to you. Of course, we'll be happy to do the correct return, but why pay twice if you don't have to? If you do not have your IRS EIN letter, you can call the IRS and they will mail you out another letter just telling you what it is. And you can also call them and you can ask them, what's my filing requirement for my EIN? And they'll tell you all your filing requirements, write them down. There'll be numbers. Sometimes they aren't as kind to say, oh, you're a S Corp, you're a C Corp. They'll just tell you the form numbers. We ask for your prior year tax return. We ask for your prior year tax return because some people have deductions and credits that carry year over year. If we don't have that IRS tax return because you embarrassed of what was done on the prior return, you could be cheating yourself from some sort of carryover that you won't get because no one will know about it. Likewise, if you have a carryover for this year, you're going to want to have this information for next year. We also ask for that prior year return because people forget things. So when we're doing your return, we're looking to see what did you have last year and is it a possibility that you're missing a form? That's why we ask for it. It's not something that's nice to have. It's really needed to do a thorough job. Next, we talked about this. We need your profit and loss statement or a form detailing income and expenses. Some of my colleagues won't even touch your business tax return if you don't have books because people cheat themselves. Notice, I don't have any people that I think are trying to cheat the government. They're trying to cheat themselves. If you are a partnership, a S corporation or a C corporation, you most absolutely need a balance sheet. You need a balance sheet because it contains things about basis, and that is needed for your tax return. The IRS rolled out some new regulations this year. And those are things that you will want to have in your business anyway, because that's what the banks look at when they go to decide if they're going to give you a loan. That's what investors look at if they want to invest. And if you're looking to purchase, you're going to be looking at that balance sheet, which shows your assets, liabilities, and equity. We want to see if you received any approval letters for a C Corp status, taxation status, or an S Corp. We need all 1099s, W-2s. Even if somebody told you it's not taxable, we will take it. Some things like disability, for example, are reportable, but they're not taxable. So you could essentially get in trouble for reporting something, even if it's not going to change your tax situation. If you're expecting a refund, we need your account number and routing number on our secure form. Don't email me. Don't text me. I don't really do text messages well because I'm busy on a computer. We need that information sent securely so your refund can be deposited into your account. We also have a questionnaire or organizer. We have one for business. We have one for personal. So we would need to have that organizer complete. You also sign it. It's basically our engagement letter and our organizer. And one is also, it also has a place for you to securely attach your documents. And when we ask for your ID, we don't want a selfie. I get a lot of selfies instead of IDs. We also need your signed engagement letter with payment. And this year, if you received a stimulus check, part 1 or 2, we need to know how much and we need to know when, because that has to be included with your return. If you receive unemployment, whether with or without the PUA on top, we need that too. Sidebar, know about the unemployment. Unemployment is going to be not considered as earned income credit. So if you are a person whose tax situation enabled you to get earned income credit last year, chances are you won't qualify this year. The other thing you want to be mindful of where unemployment is concerned is that a lot of people didn't pay sufficient taxes on it, because that's how unemployment works. So a lot of people are going to end up owing money this year that never owed before, and a lot of refunds are getting smaller. Now, I haven't looked at any of your numbers, so no, I'm not talking about anybody in particular. I don't know anything about anybody in particular unless I've actually done the math. Okay. Any questions about this required documentation? So now I'll go back to Miss Marquita. Hey, Miss Marquita. She says, do you think it's a good idea to open a tax account? I don't, because if you are an S corporation, you can actually adjust your, and I'm just talking because I know you are, you can just adjust your withholdings from your W-2, or if your spouse works, or if you're on payroll for some reason, you can adjust those withholdings and you can just mail in the payments. Sometimes people open up these tax accounts and then the tax never leave the account to go to the IRS. I don't think you would be one of those people. You can open up a tax account if you want, but if we're paying ourselves like we're supposed to do, because we're in business to get paid, if we're paying ourselves, you will have money of your own in your own account. And if you're taking distributions, then you will have money of your own in your own account. So theoretically, the money that's left over would be there and you could pay tax. It'll be on your balance sheet. So on your balance sheet, you'll see you have that liability that taxes are payable. So it's not needed. But if you think that it's something that would be helpful to you, you could do it. Somebody asked, is this just your rules? I know Athena didn't say it like that. Is this just your rules, or this every company? Because you're doing too much. No, Miss Athena, I know you didn't say it that way, but people have said it that way to me. These are not just my rules. I'm a certified public accountant. I'm held to conform to IRS Circular 230. So these are the things that the IRS requires us to do and have. And there are some additional things for 2020 tax return because of all of the stimulus money. Aisha, or is it Aisha? I think it's Isha. Asks, should you open up a different account for payroll while you're small? So that's going to depend on how your payroll is set up. If your payroll is set up like I hope it is, as a matter of fact, if anybody needs payroll, I'm going to drop you a link for payroll. I didn't get this to my team. They always say that I think I give them things. I know I didn't give them this because I didn't think about it. So I'll pull it up myself. For payroll, if you are working with a payroll company that is taking the taxes out of your bank account every paycheck, which I suggest, you don't need a separate bank account. But if you are doing a thing and you paying it quarterly, or if you using Procare and you doing it quarterly, Aisha, QuickBooks payroll is horrible. We get QuickBooks payroll for free and we are out, and we are accountants and we know how to fix it. So if anybody needs a payroll company, I highly recommend Gusto. That is an affiliate link. But even if you don't go through my link, I highly recommend Gusto Payroll. And that's because they take the taxes out of your paycheck every pay. And they also file the tax returns and they file it timely. So I do not suggest doing payroll manually yourself. And I do not suggest doing payroll with one of these systems or companies. Oh, we'll do it for $2 and we'll just make this payment in 3 months. Because every time, actually, that's one of the reasons why we do very little payroll, because payroll has high liabilities and QuickBooks Online is bad. This is a disreferral, if that's a word. I don't know anything about the payroll corporation. So I want to give you guys a process overview. So someone said they use Procare software. Procare is good. The calculations are fine. It's just making sure you do the compliance, you're timely, you're mailing in the payments. Most of the people we've worked with, they use Procare, did not do that. They did not understand, and they had problems. But we do have another division where we do IRS representation, and we get a lot of payroll problems over there. So this is how the process works in working with us. And I do have to add in the PPP slide because I don't know where it went. So the first thing you would do is you would complete your questionnaire, and you would either pay your 50% deposit or you would pay your full amount to have your taxes done. We review the documentation that you gave us, and then we ask for additional documentation if something is missing. Something is usually missing. And that's okay, because that means that we're probably finding more money for you, whether it's more money in your refund or whether it's more money that you get to deduct. So we are not trying to drag the process out. We just want to be thorough. Then you will receive your invoice. So we didn't collect the deposit through the form this year, so we'll just send the invoice. Then we'll begin working on your bookkeeping, if you need bookkeeping done to get your tax preparation done. Or we'll jump straight to preparing the tax preparation. At this point, again, if there's anything else that we encounter or discover along the way, we will ask for it. Once the tax return is completed, you will probably either have a phone call with myself or another CPA on the team. There are 3 of us that are CPAs, and then we have other accountants and tax professionals as well. You will have a conversation with one of us. We will discuss the results, and then you will have the ability to electronically sign your return and print it out and save it. This year, we're adding another step, and we're going to store your form in our new client portal so that if you lose the return, if you delete the file, you'll always be able to go in there and retrieve your file again. Does anybody have any questions about the process? So if you have questions about what do I need for my tax return, do I need to get this form, anyone that answers the phone will be able to help you. If you need a consultation and you need to know, oh, this is my tax situation, this is a problem, then you'll be you'll be given a link to schedule a paid consultation. So you won't need to speak to a CPA to be given a list of forms to have your tax return done. I only ask for receipts for items over $2,500 or more, or if there's something in the tax return that requires us to ask for a receipt. But the IRS under Circular 230 does not require me to ask for receipts. I have to ask if it doesn't look right, but I also ask if I'm concerned that someone is going to perjure themselves. And a lot of times it's unknowingly. Because ladies, gentlemen, when you sign that tax return and you sign that bottom, notice it says, I agree under penalties of perjury. What that basically means in translation, and I'm not interpreting law because I'm not a lawyer, but what that basically means in accounting talk is if there's anything wrong on this tax return, I'm responsible. Doesn't matter who did it. So if we feel there's something just not adding up, we will ask to see. But otherwise, if we are not doing your books, we are not doing any bookkeeping or accounting. We love to do your books, but no, we won't require receipts. So if you want to know how to get started, this is an old slide from last year where we told you to send an email. This year, you actually don't have to send an email to get started because we got the forms built out. And this year, we do have the form built out for accounting and for tax. So if you are a Schedule C person, if you are a Schedule C sole proprietor or a single member LLC, this would be the form that you would need to get started with your tax return. Now, if you are an S Corp, a C Corp, a nonprofit, or partnership, I knew I was forgetting somebody, you would need to do the business tax form, and this is the form. So we look over what you send, and then we contact you for additional information and to set up a time to talk. So once we receive your initial submission, we will contact you for additional documentation or to set up an interview time to discuss the return. You can also find us on the web, and on our website, you'll see that button that says Start My Taxes. We keep it in the center of the screen because that's probably what you see first. And for those of you that yelled at me, I finally took the picture, the stock photo off of my website for now. And our website is jonestaxesonline.com, and the best email for us is team@jonestaxesonline.com. But once you get into our environment, you will be hooked up with our new portal, and we encourage you to use the Team Talk section of our portal because myself and whatever other accountant is working on your account will get it. If we wait for one person to get it, it'll be a longer delay. So somebody asked if they could use us as an accountant only. Yes, you can if that's what you would like to do. Most of our clients, we do the accounting and the books for them. And then we have some clients we just do tax for. We have some we just do books for. You however you like. But it is usually if another person has several other companies or their spouse has other companies, then a lot of times they may go with whatever they had going on. And we play nice with other accountants and bookkeepers. We don't bite. So if you want to have a consultation before you have your tax return done, we do charge a $175 fee. And if your question is really one that you did not need to ask of a CPA, we'll apply that fee to your tax return. But if you need to discuss specific accounting or tax advice, that is a separate engagement and there is a fee associated with it. And again, Facebook Messenger is not the fastest way to reach me because I'm still reading PPP. So does anyone have any questions there? And Jamie says I got to talk about PPP. I'm going to pull up an impromptu slide if y'all don't mind. Jamie says she's still learning the portal. Jamie, we are too. The portal was implemented because people were missing out on stuff, missing deadlines. And if I had to continue to pay someone to call people and chase them down, I was going to have to increase everyone's fees. And we didn't want to do that. Now, there are some people just below the minimum fee that we might have a talk with, but we didn't want to do that. So to be cost effective, because time is money, and you weren't one of them, Miss Jamie. You weren't one of them. None of them are here today, but that's why we implemented that portal. There's automated reminders. So that is not me keep asking you, send me this, send me this, send me this, because it costs me too much to do that. So we had to implement a new system to do that for us. That's our first step in mitigating some of this. I'm sure we'll come up with something else if the problem persists. So let's talk about PPP, EIDL, and all that good stuff for a minute. I don't know if the gentleman that asked is here. PPP is not taxable. In the beginning, it was taxable. PPP is not taxable. If you get forgiven, it's not taxable. Now, if you don't get forgiven, it still wouldn't be taxable because then it turns into a loan. Loans are not income. If you're doing your own books and you are sending me a P&L, I will be asking you, does this include loan money? Why? Because we do our due diligence. We do not want anyone paying tax on anything that is not income. Loans are not taxable. EIDL is not taxable. Now, do y'all remember when we got all excited and we started telling you all that the EIDL grant, that $1,000 per employee they gave out, and we told everybody, so Mary, this is what I'm talking about under the CARES Act. So that EIDL grant, the $1,000 per employee up to $10,000, originally that was going to be taxable income. Excuse me. But over the Christmas break, the IRS and the SBA got together. They kumbaya and played nice. And they decided that EIDL grants are not taxable income. So any grant for the federal government that was EIDL is not taxable. Now, depending upon your state, if you got a CARES Act grant from your state, that could be taxable. The only grant that was marked not taxable was that EIDL grant. And then the federal government has its rules. The states do not have to follow the federal government rule. So, Mary, when you ask your question about the CARES Act, I'm assuming you're talking about something state specific. It could be taxable. If you're talking about the EIDL grant, that is not taxable. And the whole reason that the government told us specifically that the EIDL grant was not taxable, that's another confirmation or indication that these grants are taxable. I see it in all kind of groups and all kind of messages. They are taxable. But what happens is, if you give me a grant for $1 and I go buy this pen for $1, you gave me money in, you gave me money out, that's zero. So that's how grants become not taxable. But generally speaking, grants are taxable. But EIDL grant is not taxable because the government says so. PPP forgiven amounts normally would be taxable. They were in the beginning, but they are not now because Congress and the SBA had a moment and they are doing that to help business owners. Now, the expenses that you paid with payroll, those expenses are going to be deductible now. Yay! At first, they told us that we couldn't deduct them. Now we can deduct those expenses. So the government is basically giving us this one green pass to double dip. Again, EIDL is not taxable. Loans are never taxable. A loan is never income. So an EIDL grant, that $1,000 per person up to $10,000, not taxable. The government ruled it, I think it was around December the 27th. So we don't pay tax on the EIDL grant. At the state level, and EIDL is economic injury disaster loan. At the state level, your state may tax that money. But because we have people in almost all 50 states, and you guys on here are in different states. I'm not going to call out the state specific. Honestly, I look them up when it's time for me to think about them, except for the ones that I work with a whole lot. So on a state level, just because it's forgiven federally does not mean the state is going to forgive it. That's going to be a case-by-case, situation-by-situation basis that we will look into when we are engaged person by person to do it. As of right now, you and me, Miss Teresa, we both asking for a friend about that full $10,000. Now, I read that there is talk in Congress that whomever did not get the full $10,000 would be given a rest. It is not law. I don't know if it's going to happen, but I'm asking for your friend, I'm asking for my friend, and I'm asking for me. And if they do give out that money, I will tell it. Y'all remember when they broke that news at 11 or 12 o'clock about the idol? I got up and I told you, yes, let us pray. That would be a blessing. Touching and agreeing. But right now, we're not getting it. So, do we have any other questions here? Because I promise I'm gonna try to stop running my mouth by 2 o'clock. So I'll give you guys a chance. I'm gonna look on Facebook. I will post the full video on Facebook. I don't even know where the phone is to see the comments. I will post the full video on Facebook. God willing, I will not delete the recording this time because we covered a lot and I won't remember everything I said, how I said it. Okay. So I see a few people are typing. Oh, while they're typing, I'll give you some other news you can use. The IRS is not accepting tax returns until February 15th, 2020, February 12th, 2021. We are not allowed to have you sign a document and we hold it for more than 3 days without filing. So what that means is if you have all your stuff ready to go and you're ready to file, we can get you all done, but we will not ask you to sign until the 9th, because we can only hold it for 3 days. And the government will not accept it until the 12th. So we are doing tax returns now. The other thing, some of the state forms are not ready yet because of COVID and idle. If we come across your tax return and the state is not ready yet, we will just tell you, and we will have to wait. We can file a federal and wait on the state. We had that situation every single year. It's usually New Jersey that gets us like that. Sometimes Cali and Pennsylvania and Delaware, they like to do that as well. So if it's not ready yet, I will do it. Miss Candace, what other page are you talking about? I have a few of them. Which other page do you follow? I'm not sure. So Casey says she's got a state grant. She believes it was through CARES funding. Yes, so if you got a grant, a lot of the states had grants out there that they call CARES Act and CARES this and a whole bunch of stuff like that. Those are probably state grants. Most grants are taxable. Loans are not taxable. I know that idle grant is not taxable, so does that mean don't add it with money received? We record all money. All money should be recorded in your accounting records. All money should be recorded, but the non-taxable money should be recorded as such. It should be clearly labeled so that when your tax return is done, but oh, that's not taxable. And the reason why you want to record all money is so that you can really see your total financial picture. So when someone goes to do your return, if they see it's labeled idle grant or non-taxable, they probably will ask you, why do you think this isn't taxable? Because we're going to be asking people, why do you think this? And then you can say, oh, well, that was my idle. And then they'll say, oh, okay. Now, they won't verify if it was from the state. If you tell them it was idle, they'll probably believe that it was idle. Same thing with the stimulus payments. We have to ask this year, did you get stimulus part 1? How much? Part 2, how much? We won't be able to verify that. So if the information provided is not correct, it will hold up your tax return. The other thing that holds up tax returns every single year is these 1095 1095A forms. These 1095A for medical insurance forms. For medical insurance, if you have healthcare and you got it through the marketplace, or you got Affordable Healthcare Act, or you got Obamacare. Yes, I just said the same thing 3 different times, but different people, 3 different ways, but different people call them different things. You should have a 1095A. Even if you only had insurance for the one day in January. If you should have a 1095A and it's not on your tax return, it will hold your tax return up indefinitely. That means if you got a refund, it's going to be held up. If you are due to pay a balance, they will prevent you even from being able to pay the way you usually would. So if you should have a 10, and we ask you that on our questionnaires and when we talk to you like another 3 times, because that 1095A is a thorn in my flesh all the time. Yes. Interest is deductible, but the grant isn't. Oh, my Shanita Jones page. There's actually another group. Can you just send me a message on Facebook? I'm actually here, so I can message you. I'm at the computer, so I don't do too much messaging when I'm not, because it's like 6 different inboxes and it's hard to keep up with, and you can't never find them when you're looking for them. So I see a few more people typing, so I'll give you guys another couple minutes to answer questions. Reimbursements, that's going to depend. Reimbursements are going to depend on who's reimbursing you, what you're being reimbursed for, what tax form you were given, and was the original expense that if you got a reimbursement for food, is that food cost included in your books? So if you include the food costs in your books, I would include the income, because it's the same thing I mentioned. Money in, money out, it's a wash. Most people spend more money. The food program will give them X amount, and they'll spend more than X. So most people spend more than the food program actually gives them. So that's a factor to consider. And then, of course, all of your information about all of your grants and all of your loans, when they give you this money, the first round, they didn't give out a whole lot of information. They basically just threw money at people. But now they seem to caught up with themselves, and you can find all this information on SBA.gov. If you have questions, you can post them in the Facebook group. Please, I won't be on inbox email. I won't be responding, but you can post them in a group and we will get to them. If you pay the contractor at your facility with grant funding, yes, anybody $600 or more, if they're not a corporation, if they are not a S Corp or a C Corp, you will want to 1099 them. And then someone said when being audited by the food program, they ask for labor costs. Is the labor cost as part of the wash? Any costs that you spend. So Shannon, are you keeping accounting records? Because if you're keeping accounting records like actual profit and loss, maybe using Xero, QuickBooks, Sage, hopefully not. What's that one that I hate? Waze or Wave, whatever it's called. So if you're using accounting software, all of that stuff should be in the accounting software. Okay, if everything is reconciled. So it all should be there. And then, you'll be able to get that all situated and straight. So I'm going to go to the next slide. So because we like transparency and because we do not want to get a lot of people booking calls to ask us for fees, we're just going to tell you what they are. So these are the starting rates for 2021, and they are valid through March 15th. What does valid through March 15th mean, Shanita? That means that even if you came in January and you fed us one W-2 at a time, one expense at a time, at the time that the tax return is prepared, if it was after March 15th, our fees are subject to increase. So these are the fees. You can have a second to take a look at it. And if you have any questions, and this is for the tax returns. For the tax returns, we just publish our starting at rates. Of course, if you have additional forms, additional states, or something like that, there may be additional charge, but these are the starting prices for the tax returns through March 15th. yes, it will increase after March 15th. Because, and by the way, March 15th is, I'm sorry. Okay. They were telling me that I got a delay. Okay. So I need to leave it up here a second longer so you all can see it. March 15th is an important date for our S corporations and our partnerships. March 15th is the day that those tax returns are due. If you do not file your partnership or your S corporation by March 15th, the government will charge you $215 per person per month or part of a month. So if you got two partners, you're looking at $430 per month until you get it filed. So if the deadline is March 15th, we have to have everything by March 1st to promise you we can get it done by March 15th. So if we email you, phone call you, and we don't get the information, and then you show up on March 15th, we will try our best to get it done, but we make no promises. Same thing with the 1040s. April 15th is the deadline for our regular 1040 personal returns and for C Corp tax returns. So with the 1040 return, that's due April 15th, we have to have all documentation by April 1st. Now, if you are one of those people that show up at the last minute and you have everything and you want to get it expedited, we can accommodate you, but there is a hefty rush fee charged. And we don't want it because we don't want to rush. So we forewarn you. So does anyone have any questions here? And when we file in these tax returns again, we really want to see the prior year tax return. And we also really want the prior year tax return so we can see any carry back and carry forward. We also are going to need your actual payroll reports. And if you need 1099s done, you can let us know. We'll actually create a report for 1099s because those need to be filed by the end of the month so that they can get to your people on time and you don't get in trouble for filing them late. Beatrice, I do not have specific daycare forms categorized. We do actually have a questionnaire. So if you are a person that don't have a profit and loss or balance sheet, after you fill out your individual organizer, we shoot you over another form through Taxaroo. And in Taxaroo, you can fill in the blanks, but you may have some things that don't fit nicely, or you may not have everything in every category. And we just kind of put that there as a courtesy to people that do not have software in place. But we have a nice talk with you about helping you get software in place so that you'll be prepared for the next year. Because like I said before, most of my people that don't have software, they leaving out thousands of dollars. And that is not our wish to see anyone do that. PPP will still do a forgiveness if we use it towards filing our tax return. Yes, Roxana. So as part of your PPP expenses, you can include accounting fees as part of your PPP expenses. Accounting fees and documentation is helping you do it. You can include that as part of your expenses. And what she's referring to, Athena, the 175 would apply if you were calling me to actually ask me, what do I need to file my tax return? Do I need to give you my W-2s? What forms do I need? So if that's what you're calling for, then we would apply that. But if you're calling to say, should I be filing as an S Corp? Should I be filing as a C Corp? Do I need to amend my payroll tax returns and things like that? If you're filing for stuff like that, if you're calling for stuff like that, then that would be a separate consultation. So what we're really trying to do is, if you do want to talk to somebody before you get your taxes done, we'll schedule a quick 10-minute call with you. Or you can shoot over an email or hit us through the portals that we set you up with. Do I have accounting and bookkeeping prices? Somebody asks that every year, and I will give you our minimum fee effective January 2021. That's actually on this slide. Nice segue. Yes, I use Patriot account. No, I don't use Patriot accounting software. I use Patriot Patriot payroll software for some of my clients. I'm a Patriot, authorized, certified, whatever they call it. I'm an advanced QuickBooks Pro advisor, and I'm also licensed through Gusto. But if you have payroll problems, I also have another payroll company that practices payroll restoration. So if you are in trouble for 941s and W-3 filings and stuff like that, I have somebody for you that's not an ADP, that's not a Patriot, that's none of those people are going to help you. Paychecks is not going to help you. I have another vendor that we use. It's basically like an extension of ourselves. We can talk about that. So these are our accounting packages. Our first level is our bookkeeper package. That is after the fact accounting. It includes monthly account reconciliation for up to 3 checking credit card accounts. We get you your statements by the end of the month. So when January ends, we get it to you by the end of February. We have email support, but I promise you, if I have to respond to you and it takes me more than 3 sentences, because I count, I don't spell, then we'll just pick up the phone and call you. We do have a quarterly financial meeting, and these are our starting at rates, and it starts at $500 a month. If you're interested in quarterly service, you can get quarterly service, and we talk about the pricing, but you can still pay it monthly. The accountant package, we talk a lot about budgeting and cash forecasting and tax estimation. That's our center package. I do not have the starting rate listed for the accountant package because that's on a case-by-case basis, and we need to dig into what you need, but it does allow for up to 7 accounts, and we get you your statements by the 15th day when a month closes. You can have a custom report, so maybe you're in food program and you need to do a report for them monthly, or maybe you're part of a Head Start or a pre-K program. You get unlimited email support, and we have a quarterly financial video meeting with this one as well. But with this one, we're updating our forecast, we're updating our tax information, and we're also talking about everything that happens in the books. And then our highest tier service is our CFO package. That's up to 11 accounts. Our financial statements are due. We give them to you by the 10th of the month. You get 2 custom reports. We also do accounts payable for the center. We are not paying bills for the home. And our home childcare providers would not fall into this bucket. And we also assist with account receivable management. We review the budget with you every month as opposed to quarterly. We do an annual federal business tax return that's included in the package. You also get unlimited email support, and we return your phone calls, hopefully the same business day, if not the next morning. And then we have a video meeting every single month. Oh, thank you, Cassie. And you are a rock star. We were talking about some people are just great. So we appreciate you. So now, maybe you're not ready for accounting. Maybe you have some form of accounting or situation going on, and you are just not certain. So with every presentation, we have a bonus offer for you. If you have tax questions and you are interested in one of these bonuses, you could ask your tax question during the facilitation of one of these bonuses. So the first one, that's financial coaching. You can split it in 2 because we may give you some homework in part 1, and we do 2 30-minute sessions. We usually charge $175 an hour for our consultation fees. So we're selling that today for $225, and you will speak with a certified public accountant, most likely me or Jacqueline. The next offer is our QuickBooks Online Diagnostic. This is different from the Cyber Monday promotion we held because in this diagnostic, we are just looking over your QuickBooks. Now, if your QuickBooks is not done, you don't need a diagnostic. You need to get it done, right? So for this service, for the QuickBooks Diagnostic, we will go into your QuickBooks file. You will give us access. We're going to go in there. We're going to look over your accounts. We're going to give you a written report. And we're also going to give you a video report. And if you work with me, you know I discovered Loom and I'm loomed out and I like to send videos. But I like to send videos because they are so much more effective than email, because I can point and click and show you what I'm talking about. And then when we hop on the phone, we can make the most efficient use of our time. So if I am sending you videos, these videos are about your company. It's about your business, and you should watch it. And I'm going to tell y'all a secret. I get a notification when you don't watch it. Yes, I stalk you. I love you and appreciate you so much that I am mindful. And if you schedule a meeting or attempt to schedule a meeting and you didn't watch the video, I send the video back again. Because when we have a meeting, and you can purchase additional meetings, but when we have our meeting, there's really not a need to do that, because if you watch and you understand what's going on, we can get the work. We can accomplish a whole lot of stuff on that call. But if you show up to that call and I'm trying to show you something that I showed you, and I ask you to send me your questions in advance, because sometimes you can ask me a question and that question will say, oh, I need to explain this to her. I like to teach. I think that's why I like to work with educators. So I really want you to maximize your investment in your business and in your accounting. So that's why all of these things are in place. They're in place because we want to give you our very best. We want to see you grow. We want to see you prosper. If your goal is to get out the game and sell or leave it to your kids, we want to see you set up in the best position. So this QuickBooks diagnostic analysis, we will go into your books, give you a report on what needs to be done. And then bonus offer number 3, maybe you want to do your own books. We're not offering training. Maybe you want to do your own books. We'll go in there. We'll set your account up. Ms. Shonda, no. If you hired us to be your accountants, we're going to set your books up, and you don't need to buy anything today. Ms. Shonda, you don't need to buy anything today. You're good. We got you. Thank you. We appreciate you. So those are our offers. I put the link in a box. And if anyone is interested, we will leave this up probably, I think, maybe for 3 days. But I left that Cyber Monday link up far too long. And I won't forget this time, because tax season is coming. So if you're not sure if your books are in good shape, you're going to need a diagnostic review, because there's nothing more frustrating to business owners than to say, okay, I'm ready to get my taxes done. And then I say, oh, we can't do this because the books are a mess. So, excuse me. And then if you decide after we do the diagnostic review that you want us to work with you, then we credit some of it towards your setup fee and your accounting fee. Does anyone have any questions here? So, and it's funny because the links here are not going to show up when I upload the recording. So we'll have to post them again. So this is the calendar link for anybody that wants to ask about accounting services. So if you have questions about getting set up with accounting service, this is the link for you, where you'll be able to get to book a call. If you need a paid consultation and you want specific questions specific to your business, then this would be the link for a paid consultation. And that's the link for that, I think. So Shana said, if our books are set up and you do a diagnostic and then we agree to have you for our accounting services, will we still pay a setup fee? If they're already set up, you may not have a setup fee. You may have to pay a cleanup fee. So if you're 2020, for lack of better words, and I don't know because I have not been in your books, but if we go into your books and they're perfect and the last person reconciled all accounts and all your balance sheet balances and all that is good, then we just start fresh from 2021. But if we go in there and if, for lack of better words, if everything is jacked up or something is jacked up and we have to fix it, then we bill for it and then we keep going and move forward. So the diagnostic, actually in 2021, that was one of the initiatives we were supposed to do is we were supposed to do an actual diagnostic before we onboard people, so that people get put in the right place from the beginning. So again, number 1 is financial coaching, consulting. You might decide to use it to get a budget set up, and you might decide to combine your 2 sessions. Or you might have questions about your tax return. I think I'm all messed up. I'm not sure what's going on. You'll talk to a certified public accountant. Offer number 2, you're not too sure of your books and you want to get that situated. You would need a diagnostic. You'll get a written and a video review explaining what's going on and some suggestions to fix it. And then bonus offer number 3, you want to get QuickBooks set up. Maybe you want to keep it and do it yourself. That's fine. That is the bonus offer for that. So Sonia asked about the information on paying herself. So Sonia, I'm going to drop that link again. Oh, can y'all do me a favor? Can y'all subscribe to my YouTube channel? Because apparently I need 28 more people to subscribe for me to get a custom URL. And then my next question is going to be, what y'all think I should name it? So if y'all could subscribe to my YouTube channel, that would be a big help. Please and thank you. Like we say to the kids, right? So I just got links all over the place. But Sonia, the first YouTube link is, if you subscribe to the YouTube channel, you'll see the videos that are there. There's more to be uploaded, but I didn't realize people were signing up. So I will need to start uploading videos there. I have them. They're just not uploaded. So does anyone have any more questions? I see we got the typing dots going on. So I'll hang out here in case anyone has any more questions. The daycare CPA, you know, I'm really thinking about using my name. My mom is always upset that I never use my name. I hated my name for many, many years. I wanted to be named Sabrina. Thank y'all for subscribing. I'm trying to hit 100 so I can brag to my friends. A lot of my friends, we all just subscribe to them, but I really only ask my viewers to subscribe. Oh yeah, that's the name of the YouTube page, but you get a custom URL. I call it a .com. You get a custom .com once you get 100. So me being a numbers person, I'm like, oh, I need 100. So yeah, the name of the YouTube page is the Daycare CPA, I believe. Thank you for subscribing. I appreciate it. Share with a friend. If any of you ladies have any additional questions, you can definitely go ahead and post in the Facebook group and we'll get back to you. And again, this is the link. It's the pop-up. It's a new toy. If you are interested in signing up for any of the bonus offers. So anybody that is working with us today, you do not need the bonus offers unless you may possibly need additional coaching sessions or additional financial meetings. Then you could go ahead and get option 1. But everybody working with us, you should be set up, except for some of our new people that haven't given us access to their QuickBooks yet. But other than that, you should be set up. And you should not need a diagnosis because we are serious about doing our job. So that's the bonus offer information if you ladies are interested. If you don't have any other questions, I do see a few people that have a couple of questions. And I'll wait until your questions come up so I can get those answered for you. And I kept my word. We are not going to be here past 2 hours. I did better this year. And I tried not to talk fast to get it. Team, the calendar link is actually in that Word document I sent you earlier. Not Word, Google. So I'll shoot it over to you again. Because there's more than one calendar. That's the calendar of somebody. If you just indicate on there that you have questions for your tax return, someone will get back to you, but we will not be answering tax-specific questions. These are questions like, what forms do I need? What documentation do I need to give you? But if you have other questions like, what's the best tax structure? That's something that we're going to have to look at, and that is a paid consultation. So we're not giving away tax advice on a discovery call. On a discovery call, we're just discovering how we can work together and what we need to accomplish that. Oh, we're grateful for you too. Athena, if you don't use QuickBooks, that's fine. If you're using another kind of software, they should all generate profit and loss reports. And if you are using, if you're not using anything, then once you do your individual organizer form, we will shoot you over. Well, that's what we do for everybody that doesn't give us a profit and loss report or access to their QuickBooks to run it ourselves. We like to run it ourselves because then we also make sure it's all reconciled and we feel good about the tax return we're doing. So what we do, if you don't have books, is we send you over another form. Yes, another form. The penalty for not having books is that you got to do another one of those long behind forms where you enter all of the income information, the expense information, if you're in a home, business use of home. But it is our prayer and our goal that everyone will have some form of electronic accounting set up in 2021. If COVID didn't teach us anything else, it taught us that we need to have our books. No, we're not going into Childcare. We don't support the software. We just like the reports. With Childcare, they actually have a report in there. It's pretty nice. They have a report that shows you the business use of home. They have the profit and loss, and they also show you it's another report for the home. I think it's under like the tax situation. And the thing I like about Childcare, I only like it for homes and for people that plan on staying in a home. If you are in a home and you plan on growing your childcare business, you want to get something more robust. This is January 2021, 24th, 21. This is the perfect time to level up. Childcare is great. You got 4 or 5 kids. You maybe have small kids of your own. You want to stay in the home. You're not looking to expand. You're not looking to grow. Childcare is great. But if you're looking to grow your childcare business, you might want loans. You might want funding. You're going to want to get quote unquote real accounting software. But Childcare is what I like for homes. What do I like for centers? I like Procare. I like Brightwell. Procare is my favorite because of the cash reports. Oh, and something else for the childcare, if you are collecting cash payments, we really are going to need that report from Procare or Brightwell to make sure that we're including it. Miss Candace, thank you so much. I'm glad that we were able to help you. Don't forget to send me an inbox message and send it to my personal page, please, because I'm done with those business pages. I ain't going back in there until like Wednesday or Thursday. I'm not good with the messenger in the text messages. I'm like an old lady in that way. Miss Athena, you are very welcome. Thank you, Miss Belinda. I hope you enjoyed your first webinar with us, neighbor. And I'll talk to you ladies soon. You know how to reach us. Thank you so much. Good night and God bless. Bye-bye.